Hello, and thank you for joining us today for this Q4 outlook. As we begin this year, we are all hoping for economic activity to accelerate robustly for the first time since the financial crisis. Not only did that happen in a synchronized manner around the globe, but the good news is that the momentum should extend into year-end. This is a great opportunity for some central banks to start their monetary policy normalization. Yet the process is likely to be gradual and prudent as long as inflation stays weak. In this context, expensive risk assets should continue performing well and hence remain expensive, especially if growth drivers can take the relay from central banks. That being said, we see regional disparities. In the US, out of the despair of devastating hurricanes come some potentially positive developments. First, a reconstruction bounce back. Second, and more crucial, a bipartisan debt deal which increases the chances of fiscal reform by December. The Fed, for its part, should stay its course as wage and core inflation look set to recover in the medium term. Its balance sheet will shrink from October onward, and a rate hike is likely for December. As a result, we are slightly underweight on Treasuries. US equity valuations are stretched, but strong fundamentals mean we keep our recommendation at neutral. And what about emerging markets in the face-up with the Fed's tightening? Well, EM countries are enjoying the pickup of global trade that a recovering global demand has fueled. With China heading to its National Party Congress, no disruption to economic activity is expected in Q4. On balance, we remain neutral on EM assets. If we stay in Asia, Japan seems to be at the eve of nothing else but a new dawn. Stimulatory policy and politics are bearing their first fruit. We expect the current policy support to endure so that we have moved to a long-term overweight on Japanese stocks. Last but not least, the light is flashing green in the Eurozone. Political risks have turned into opportunities, and a pickup in corporate investment should boost the cyclical recovery. The ECB's tapering should be dovish, with a slow pace down of purchases through 2018, and low rates beyond. In this setting, we are slightly underweight bonds and overweight EMU risk assets with a marked preference for equity. Thanks for having followed us today for this round-the-world economic and market overview.